I've turned $20,000 into $100,000 and then that $100,000 into profiting over 7 figures over the last few years from nothing but cryptocurrency and investing using strategies that most people don't pull together. And that is using on-chain analysis, fundamental analysis, sentiment analysis, and technical analysis combined to analyze this market, to get in early on altcoins and cryptocurrencies, and then help me analyze when the right time is to get out. And I've been able to help thousands of other people over the last few years by investing based off systematic frameworks, data, and analysis, not hype, FOMO, and shooting from the hip that so many people were able to make money in the past with crypto, but no longer is that possible. And in today's video, I want to detail how we analyze cryptocurrencies, sharing the exact frameworks, blueprints, and step-by-step guide so you can do the same. Now, here's how I lost tens of thousands of dollars back in 2018 and 2019 by following people online that I trusted that didn't really know what they were doing. And I didn't know what I was doing back then either when I first started out in crypto. The thing that I got sucked into was people online, influencers, traders that, really promote this idea that they know a lot about crypto, but at the end of the day, they are entertainers, they create engaging content, they come up with really great ideas and clickbaity thumbnails. They suck you in. Primarily, their business model and their incentives are misaligned to yours. And this was something that I didn't realize until I started working for a crypto YouTuber back in 2017. I started working with him. It was the idea that incentives really matter, and people online create content, and especially in crypto, influencers, their goal is to get your eyeballs to click on their affiliate links, and they make money off you trading off what they say, and they have no recourse on if they give bad information. They just want you to trade on their links. And that was something I didn't really realize when I first started out. And I was listening to one guy in particular who had this crazy trading algorithm, and we was basically saying that Bitcoin, we were at like $30,000 at the time, was going to retrace back to like 5 or 10,000. That ended up didn't happening. I sold a little bit of my Bitcoin position back then because I thought it was right, and a few years later it completely disappeared. And this happens every single cycle. I've been full-time investing now for nearly 9 years in crypto. I run one of the world's leading crypto research and strategy companies for high net wealths, and seeing this space come and go, especially when the market is going sideways or down like it has for the last few months, you see these people disappear. They kind of go, they're only here for the fast cash, the fast money. And that's really, really important to understand that. And the difference that, we're trying to build here at Collective Shift is, primarily about independent analysis and research without the affiliate links and paid promotion. So the incentives are aligned. So the big thing I want you to take away is that, no one has a crystal ball. No one knows exactly what's going to happen, but we can use analysis to predict and help us understand how to position moving forward. There's always risks involved, but with risks creates rewards. And, for us, it's not about using one analysis style that a lot of influencers and a lot of people just know technical analysis really well, or they just know on-chain analysis really well. At Collective Shift, we've got a full-time team of 18 people, and our analysts put together different frameworks and different decision making to come together. And we think of it like a fund. Like if we were to take investors' capital, how would we deploy that capital? Well, we'd have different opinions, different voices to come together and make that decision rather than just having one voice. Because if you come together as a team, you're going to have difference of opinions and, the hive mind mentality. So where we are right now and where we are going forward, is really, based on being able to build that structure without that emotion. So let's dive into it. The real core basis of any, market structure, and understand where we are right now. This is a screenshot of, where we were in the middle of 2024 in the financial year, just to really showcase the 4 sort of phases of a market structure, right? So you've got accumulation down here in the purple. This is really primarily where we've got a lot of sideways action, not a lot of excitement, and any good news tends to fall on deaf ears, and it's a great time for accumulation. The next period here, you've got the breakout, and this is obviously where you have a huge breakout on the charts where you've got a lot of people that were maybe shorting at the end of this accumulation period. It usually starts with a liquidation of a lot of those shorts, and the market moves violently to the upside. Then you've got the euphoria piece where this is like where everything sets in. It's absolute mania, it's chaos, the feeling of the market's never going to go down, and then you have that correction phase. And this changes from timeline to timeline. Every period and cycle is different. I think where we are right now, if we look at the chart, we're in that sort of accumulation period. We probably had that accumulation period back in the end of that 2024 to 2025. We had a bit of a breakout. I'd say, yeah, potentially we hit euphoria, but potentially we were still in that breakout period. A lot of macro uncertainty sort of played out, and right now we're back into that correction and now accumulation period. So we're kind of waiting for that next breakout to occur. Now, really basic, TA can give you a really good understanding of basic trends and basic data. Most people look over the charts. Most people think there's, some really flashy, crazy signals that are going to give you absolute tops and bottoms. It's very, very hard to do that. In fact, it's pretty much next to impossible. 99% of charts really, aren't that valuable. We want to try to really look through that and find out what really matters. And for me, it's really not about looking at 20 different charts and 20 different indicators and sitting in front of the charts all day. That's what our analysts do. There's a few basic ones that we look at and provide to our members to kind of give a good indication of, just general momentum. But TA isn't everything. It kind of gives you general momentum and understanding. One of those ones is the moving average. This is a really basic one. A lot of traders and investors like to use this. It's kind of just a way to generate momentum or directional strength of a trend. So you can see here in the red, this is the 50-week moving average. So this is an indicator that we've been, or trend line we've been wanting to regain for basically the entirety of this cycle. You can see here the 50-week moving average has been really that baseline support for the entirety of this cycle. We broke below this back in October. This is actually where I sold and repositioned my portfolio to be more defensive because we broke through that support line. Now we're back in that accumulation period. So that was a correct move, very basic sort of indicator to help us understand which way and direction we're going. And then the blue line is the 50-day moving average. A little bit less of an indicator for us. We like to look at the 50-week moving average. You've then got other things like the RSI, which is the relative strength index. This kind of gives you an indicator on where the market is heading on a day-to-day level, week-by-week level, and you can see the strength of volumes that are coming into the market. This is basically like a momentum indicator. At a very cool, basic level, I like to look at the RSI, I like to look at moving averages, and then obviously you can look at different charts, time frames on the left-hand side, and then you can overlay also different assets to see, the performance of different coins at any one time. And the next one is taken just directly from our crypto investor checklist. This is something that we provide to our clients and something that we use internally. So fundamentals is one of the biggest parts that have really been able to get us a huge advantage. And fundamentals is essentially looking at the project and understanding where it might be in the future, what are the growth metrics, is the token set up for success? And a lot of people don't realize, but fundamentals is the core reason you're able to get in early into altcoins. Is where I made a lot of money on Syrup, getting back 5 cents, sold at 40 cents. Hyperliquid we got in early. Solana $22. Like, you don't get into those projects early because of technical analysis. Technical analysis doesn't give you indications of early stage startups, right? Altcoins at the end of the day are basically early stage startups. So we like to look at the fundamentals of the project. So an example, what even is that? We can look at the industry. We can look at the team who's actually building the project, the white paper, understanding are the economics of the project actually even worthwhile? It's essentially a business plan, funding, the backing, blockchain use case, the token, the research, the progress, so many different things you can look at to understand on a fundamental level based on where these tokens are at. And, as an example, if we go over the shift list, this is, the way we position, the altcoin research to our clients. You can look at something like Hyperliquid. I think Hyperliquid's a super solid project from a fundamental perspective. And one of the reasons because of that, if we look at the fundamental side, is that it's got strong tokenomics with product market fit. As it generates revenue, it goes back and buys back the token off the open market. And that's what drives the supply and demand economics higher for the project. It's also got an allocated assistance fund, which automatically buys more tokens off market as well. And then token unlocks, again, as another example of fundamentals. We're looking at how much of the token is coming into supply. A lot of people don't understand or realize that altcoins increase and expand supply for early investors, the team, advisors, things like that, and that can push a lot of supply to the upside, and then the demand doesn't outweigh that, and that's why you get a lot more sell pressure. So understanding that, upcoming catalysts, what functions, what features are they building is really important, and then understanding the revenue utility side of things is really important. Again, a lot of our clients don't give a shit about any of this sort of stuff. We do that heavy lifting, but understanding where the distribution of those tokens are going is very, very important, because inflated allocations to different users or the team can increase supply and sell pressure. As an example, if you have an over allocation to the team or early investors or VCs, they may have accumulated a lot of tokens at early prices. Their unlocks happen at year 3, as an example. They're going to want to sell predominantly a lot of their tokens as that launches, and as that unlocks, it can put a lot of sell pressure on the token. So really important to understand that. And this is a story I always love telling. This was literally about a week ago. We got this message from Martin, part of our group. He didn't understand token economics and didn't understand crypto before he joined. He was actually broke 5 years ago and completely paid off the home and the mortgage by following our personal portfolio structure and still owning a lot of crypto. And ultimately, the reason they were able to do that, and so many others, have done the same, is by getting into altcoins before the rest of the crowd. You may have heard like primary markets or getting into DeFi projects and things like that. That has allowed us to get into altcoins far earlier than others, and that's where we made a lot of the returns. Syrup is an example of that, a project that we got in that had great fundamentals that you wouldn't have found online. We bought in early 2025, around this level, 10 cents, even 5 cents. We got some accumulation of that. By the time I got to the top here, this is when Coinbase listed it, right? It was already too late, and that's where I took profits. And you can see this post, I think it was up like 560% or something when I shared that I took profits, and that was primarily because we got in early based on the fundamentals, exploded, then we took profits, and happy days. So if you're interested in that, how we do the analysis for you, and we can basically copy and paste what we're doing, and we do the heavy lifting if you're busy. If you are investing more than $100,000, we primarily only work with high net worth investors. There's a link in the description below. You can click, check out, see how we operate, jump on a call and see if it's a good fit. But the fundamentals is really important. The next part is the on-chain analysis. analysis, right? And on-chain analysis is really important to see exactly where money is moving on-chain. And a lot of people don't even understand what on-chain analysis is. It's a beautiful thing. The blockchain is transparent. You can see literally what's happening at any one time on the market. And Checkmate, he's our on-chain analyst here at Collective Shift, one of the leading on-chain analysts at Glassnode, which is one of the biggest in the world. Basically, what we're able to see here is a range of different indicators and metrics. Again, you can overcook this, but being able to understand, miner outflows, the miners that are, creating revenue on chain, where is that going? Where are they selling? At what price are they profiting? Exchange flows, tracking where the money is moving from exchanges, and are we, high in supply, low in supply. One that I really like, or two that I like, is the net unrealized profit or loss. So what we saw in 2025 was a huge amount of early investors in Bitcoin offloading a lot of their Bitcoin onto the market and selling it because they were in profit hugely, right? And if you look into it, you could see there was a massive amount of sell pressure coming from these early stage Bitcoin investors that were now being rebought by new investors. So if you bought a Bitcoin at $10,000 and you're selling at 100, well, you're making $90,000. That was the net unrealized profit they were in. They realized that profit. Now there's a new wave of investors that have just bought that Bitcoin at 80, 90, 100, 110, 120, that they're not going to sell until it goes even higher, right? So understanding that on chain, you can see the entire value of the market. And, that is the chart that we really look at constantly, is the market value to realized value ratio, MVRV ratio. We can see really tracking this price of like long-term holders, who bought, who held, and we can really see, as an example, the value of overvalued or undervalued holders in any market based on where they're at. So generally speaking, MVRV ratio increases in bull markets, decreases in bear, and we can see the difference between people that are in profit and hold that versus what the market is selling Bitcoin for. You also got dormant coins. You can see when the market's moved and when they're not. And, on-chain analysis gives us a really good indicator of where the market's moving and who's doing what, all right? And that's, some regular analysis that Checkmate does. Now, if you want to make sure you're not getting, sucked into the noise and the FOMO, and essentially, where all beginners miss is buying at the top and selling at the bottom, right? And that really comes back down to sentiment. Sentiment analysis is something that we really rely on, especially when it comes to exiting the market. A lot of people struggle with their exit strategy. It can be very overwhelming. Everyone's thinking it's going the same way, and so many people round trip crypto because they don't know when to sell. One of the best ways to analyze that and take profits, I took out life-changing amounts of money back in 2021 in the metaverse. I invested in 2019, 2020 into the metaverse, sold in 2021 based on sentiment. And, at the time, everyone was screaming, it was going higher, the market was ripping. It was like, as you've probably known, if you've been in crypto, it can feel like the market is never going to go down. Sentiment was the thing that allowed me to make sure that I was exiting, and it can feel the worst thing. I remember sitting there over the top of my computer, just like hitting the sell button. It felt nauseating. I felt like I was going to throw up. I felt like I was making the worst decision ever, but that is the power of crypto, and that is the power of sentiment really driving humans to do one thing. Like, crypto is a psychological asset. It is the absolute best and worst of human emotion and psychology, and that's why we make so many emotional decisions. So sentiment is really important. We track things like Google Trends, followers, Twitter, Reddit. Community sentiment is really important. Who's actually using this project solution? Is this just an idea? Is this meme coin thing just because, a lot of people can talk about it, get excited about it? Is it actually got fundamental value? Who is the investor even buying this? And then we can track a lot of on-chain sentiment indicators as well. And one of the other things is that, looking at something like Sentiment is a great website where you can look at basic sentiment-driven intelligence based on what's happening with Twitter, like general social media metrics and what's happening on the behavior of crypto. So Sentiment is something you can check out. Again, this is what we do for our clients. But it's really important when looking at sentiment and just looking at general research is you're looking at the right platforms to source when you are, looking at this data, because a lot of people inflate information. A lot of people don't even know what they're putting out. They might just see one indicator that could be wrong and they're sharing it. So it's really important to get the right source of information. So looking at the right websites. If you're looking at platforms or projects in particular, looking at the right Discords, Twitter, blogs, YouTube, whatever it might be, even GitHub to look at if you're more technically inclined to look at that. Really, really important to make sure you're getting the data from the right sources. Now, ultimately, the goal is to buy assets early, get in them from a long time, and then sell at the right time. And where a lot of people go wrong, again, is they're just looking at one of these sources of analysis and not looking at the whole picture. And my goal, and the reason we've been able to outperform our portfolio over the last 6 years, we've got audited returns, which I can show you here on our portfolio, is because we combine fundamentals, sentiment, technical analysis, and on-chain. Really, really important you combine all those to get the right output, because fundamentals can tell you what to buy, technicals can give you a direction, sentiment can tell you when to sell, and then on-chain can tell you when or how. All right, so it's kind of like an amalgamation of all of them. And you can see here, this is 2020 to 2024. This is my audited returns. It was down 12% in 2020, but then I was able to make 3,000% returns, not because I was investing in 2021, it was because I was selling in in 2021. I was buying back in 2019, 2020 when everything was boring. This is what a lot of people don't understand, is they react to headlines. They think about, now's not the right time because the market's down. Now is the time to be allocating and figuring out what your portfolio should be, because when the market is rallying, that's the time you want to start to flip to sell, not getting excited and buying into that FOMO when the market's up. So at a really core level, we're looking at indicators of when sentiment's at lowest, when we are in accumulation, because that's the time to buy, but it feels the worst time to get involved, all right? And that's where a lot of people go wrong, is not having that profit taking and exit strategy sorted. And that's where I nearly lost everything back in 2018, 2019. And this comes into managing risk and taking profits. And this is something that people think they need to be right every single time, every single trade needs to be correct. That's not the case at all. You're going to get a lot wrong. And this is where so many people go wrong, and where 90-95% of investors I see round trip or don't exit or don't take profits because they don't actually utilize this. And it's where I went wrong back in 2018, 2019, and it nearly wiped me out completely. And that was because I didn't have an exit strategy. I didn't know when to sell, and I didn't know what indicators and who to listen to. It was just information overload. Everyone was saying something. I'd follow one person over here on YouTube. The guy on Twitter would say something else. My friend would say something else. Everyone's, basically experts in crypto, but yet no one really knows what's going on. And I think you probably know that at home, right? Watching this, everyone's got a different opinion. And when it comes to the chaotic nature of crypto, these are markets. There's winners and losers. So you need to have a plan, or you need to have an edge. Otherwise, you're going to be left behind. And people don't realize this. If I was to do it all again, I would have for sure signed up to a coach or get a program where I can learn from the best and pay for it. It's what I do in all my other aspects. I pay $80,000 a year for a business mentorship in the US. I've got another program that I pay $15,000 for, another business one. I get mentors. I've got, therapists that I pay for. I've got a PT that I pay for. I have a chef that I pay for. I've got different advisors. I've got a marketing advisor. I've got a YouTube coach. I've got a crypto analyst that I pay for. Like, I pay to get the best insights and data so I can fast track and get ahead of everyone else, so I don't have to make all the mistakes. And I didn't do that when I started, and I wish I did, because I would have been able to fast track and not get wiped out nearly when I first got into crypto. I bought Bitcoin, at $15,000, and I went down to like 3,000 or 4,000 in like the following couple of weeks, nearly absolutely torched my entire capital. It was because I just didn't really know what I was doing. All right. And now, again, the thing that we teach and the thing that most people have a struggle with, it's easy to buy. Everything I've just given you can give you reasons to buy. That's not the hard part. But if I was to start over again, it would be to have the right exit strategy. All right. And being able to, understand and scale out at the right time. And this is something that a lot of people struggle with. And if you want me to do a deeper dive on selling, please let me know in the comments. But a lot of people think you can just come up here and sell the top based on technical analysis, or some indicator is going to give you the alert. But this is what happens, the oh no scenario. You want to sell there, you don't, you end up round tripping, you lose out. All right. The greed scenario is you're supposed to be selling on the way up using the indicators, and primarily sentiment is what we use to analyze when the right time is to take profits, using on-chain, using fundamentals. And it's what's helped me every other cycle, because on the downward swing, it could be a year or two on the downwards, and losing a lot of money is a very sickening feeling, because I've done that before. So when it comes to building out that strategy, that sell side strategy, it's part of our 7-step process we take our clients through. But primarily you're looking at different indicators, whether it be target-based, time-based, dollar cost averaging out, sentiment. Again, this is where sentiment really comes in. It's the most common way I use selling. It's the hardest way, but with the data and insights and advantage we have with an entire full-time team of 18 at Collective Shift, we get that edge. And if you don't have an edge, how do you think you're going to win against the quant funds, the huge institutions, BlackRock, Fidelity, that are piling in, right? You need to have an edge. Otherwise, you're just like everyone else. My edge on a basketball court is -100, but my edge in crypto is really solid because I have that data and insight, and I have a team, and we're looking at this 24/7, and we have access to insights and data that most retailers don't, because we pay tens of thousands, hundreds of thousands of dollars for information and data, right? So that's really important. The best investors, at the end of the day, they don't guess. They have a systematic framework. They have a system to review, and they follow a repeatable process. And for us, whether it be coming into crypto or when you've got an existing portfolio, constantly reassessing is really important to understand, whether or not you should be getting out, buying back in. Should you be selling here? Is the altcoin dead? You need that routine and constant reviewing, because without that, it starts to feel chaotic. You start listening to different people. They're all telling you different things. So again, what I like to look at, first of all, is the fundamentals. Every month I might look at this from a fundamental perspective, or every week, to just analyze and understand if my altcoins are still heading in the right direction. Do they solve a growing need? Are they still building? Do they have a community of developers? Are they active on socials? Are they gaining legitimate adoption? Are they being surpassed by competitors? Do they have sufficient runway? Are the tokenomics still good? Are they outdated? Is there any upcoming catalyst? Really, really important, all right? Number 2, are you too emotionally attached to your altcoins? So many people get stuck in this. You just hold an altcoin down 30, 40, 50%, and you just hope it's going to go back up. But people don't realize that if your altcoin's down 50%, it doesn't mean it can only go down another 50%. It could go down another 50%. It could go down another 100%. The further your altcoin is down, the more it needs to go up. If your altcoin's down 80%, it's going to have to go up 400% just to get back to break even. All right. This is the sunk cost fallacy. People think that, you know, by holding continually, they will be able to get their money back. All right. But if you had that money again, I always ask this to our clients when we do one-on-ones with our clients is, if you had that money again right now, would you deploy that into that altcoin you have? And if you don't, well, then you're essentially doing that. All right. Every day you hold a coin, you are holding that, actively buying it because you're holding it in your portfolio. All right. So you need to remove that sunk cost fallacy. That opportunity cost is real. You know, the other one is consulting tax professionals and understanding that and knowing whether or not you can make some moves to offset your capital. Really, really important. And make sure you're understanding and reviewing those changes and consolidate and prepare. You need to be proactive, folks. You don't want to be reactive in this market because that's where things go south. And this is where I really went astray when I first got into crypto 2017, 2018, was listening to too many people and it made some really poor decisions. I got early into synthetics because I held Haven, a coin before it turned into synthetics. This was back in 2018, 2019. And I sold it not knowing what was going on with the project. I got bored and impatient. And then I went from Haven to synthetics and went on this crazy run. Would have made millions of dollars because I didn't have the data. I didn't know what I was doing and I got impatient. I was just listening to people online. So that was a big thing for me. I really am on a mission now with Collective Shift to, you know, ensure people have the right tools and the right strategies to be able to do this on their own and win, because without that right source of information, without that right data, you are evidently going to be left behind. That's why 90% of people, you know, lose in crypto. So now you've got the tools, the systems to act smarter, build out those frameworks, utilize those analysis styles to use in your own ability and research and win in crypto. If you really want to master the game and you don't have the time and you want us to do the heavy lifting, you know, here at Collective Shift, I've got a link in the description below where I'll share with you how we do the heavy lifting for you. We provide the insights, the frameworks with our independent team. We work with over 1,000 clients active right now, and we're helping a lot of successful people build generational wealth, protect the downside, and manage their crypto allocations the right way. So if you're interested, click the link below. There's a free training so you can see how that works. Really excited to keep working with you all online. And if there's any other videos you want me to create, please drop them below. Otherwise, see you next time.